A Look at Finance is underwritten by Janney Montgomery Scott, trusted advisors for generations.
Oh, there must be something in Stephen Carlton's hair product today, because you're just so giddy.
It's the cold.
It's the cold.
It's the cold.
There's something going on here, and I'm not quite sure what it is. Stephen Carlton, First Vice President, Janney Montgomery Scott, here with our you are, sir, here with our weekly look at finance.
Thanks,
we should
David.
just let you talk for the entire time.
It's great to be here.
It's good to have you
You're
here.
looking good.
Thank you. You are too. Nice new haircut.
Thank you. Thank you
Would
very
you like to go to the list of stories that we have?
Absolutely. Let's do that.
All right, let's start.
Yes.
All right, market's down. 10-year Treasury dropping, and the U.S. dollar is weaker. A little bit of a snapshot of the market. What's going on?
And that's the good news.
All right. All downhill.
So we're at a 5-week low. The market sold off today. And really, what's the sell-off all about? It's a bunch of little things and one piece of news this morning that really kind of spooked the market. And that came from China.
Okay.
China's producer managers report came out, and it looks like China's slowing down. China's got some cash flow issues, some manufacturing issues, and that was just enough of a reason, given the earnings reports and some of the things that have come out lately, to make the market say, you know what, let's sell some.
That's interesting because, as you say, China has been this economic growth engine. It's just continued to chug along, and all of a sudden they're putting the brakes on things there.
It's been 5 years of pretty miraculous growth. I mean, the amount of manufacturing that China has ramped up over the last decade is incredible. And so those growth numbers, even if they're slowing just a little bit, it just shows how much the world is dependent on that component of the index.
Okay, give me some background on the 10-year Treasury, why it's dropping.
So this is good news. And so we've been talking about interest rates really going up since May, June, 1.6% on the 10-year Treasury, all the way up to 3% going into the new year. And it's been going down. So as interest rates go down in the 10-year, the price of the bond goes up, but that benefits people like mortgages, for car loans, those kinds of things. As interest rates back off from the high of 3% in the 10-year, it means the 5-year interest rate's backing off a little bit. So that's, as the economy looks like it may be slowing, it takes some of the pressure off of rising interest rates.
All right, the economy's slowing, the U.S. dollar coming in weaker.
Yeah, and this is, again, all these things are connected. So, with the dollar showing some weakness, the Japanese yen and what's going on in Europe, all these things are kind of making everyone take a look at, take a stock in what they have and say, what should we do? How should we rebalance?
Last week we talked about retail sales, some disappointing numbers from Bed Bath & Beyond, the Dollar Store, Dollar General. And you say this is, we're starting to see this showing up on Main Street. We're seeing sales pop up where, the health of the consumer is not as good as it should be.
David, we talked about this going into the Christmas holidays and saying, we were seeing a lot of the numbers. We were seeing a lot of the store sales coming in more aggressive. That deep discounting hurts the profit margins of these places like JCPenney, like Macy's, like the other stores you mentioned. And so that discounting should have really stopped after the new year, but we're seeing deep discounts in stores going into January, and that's not good. That's a sign that they're not moving the amount of product that they need to move, and so that doesn't bode well for retail sales.
All that excess inventory that they've got to unload somehow.
Right.
And in a minute we'll talk about another big retailer that has some other problems on its hands, the Target Corporation. But emergency unemployment, the benefits running out. The number of people, the labor participation number, decade lows. So this is not good news because everything's related here.
Yeah,
We're painting a picture here that's could be potentially pretty dire.
Part of our job is to report on the numbers and not to just always focus on the silver lining, because there are some serious things here. And I think a lot of average Americans are looking and saying, yeah, the unemployment number is getting lower, but is that a product of people running out of unemployment insurance, or is that a product of people actually getting gainful employment? And I think it really falls to the latter. I think the 1 million+ people that ran out of emergency unemployment this month, it wasn't that they found jobs. The majority of them ran out of unemployment. So we saw the number of employed people dropping, but they weren't getting gainful employment. And you talk about labor participation rate, that's a more accurate measure as to how many Americans are actually working. And that number has not been as positive as it could be.
Tough job market out there. We were talking a moment ago about Target. Target, of course, 2 stores in our area, one in Queensbury, one in Wilton, that massive distribution center that they have up there in Wilton as well, announcing this week 475 jobs will be cut. They're not going to fill in some vacant positions, but we say that's just language to balance their books. 700 vacant positions they're not going to fill. Right. Target, it just keeps coming for them. They've got this massive data breach that they're trying to deal with. They now are cutting cutting these jobs, and news this week also that they're cutting health insurance for all their part-time employees. Target was supposed to be this cool, retailer that was taking on Walmart and hitting some tough times.
It's not just Target. Definitely Target's gotten a lot of attention in the last month. But we're hearing the same kind of rumblings from Macy's, from Sears. Walmart's numbers are not as strong as we expected, like we said before about Best Buy and Bed Bath & Beyond, like the dollar store you mentioned earlier. So this is not symptomatic of one particular company being out of favor with the general market or not necessarily having the right products on the shelves. I think this is more of a symptom of underlying consumer spending, underlying consumer health. And those signs are the thing that I think that's got everybody a little bit nervous, that the American consumer is a little stretched. They don't have as much money. Fuel prices are higher. A lot of things, are weighing on them. And it's showing in the sales.
All right. Well, one more story that's kind of having an impact on people's bottom line, and then we'll get to some good news, because it can't be all doom and gloom all the time. Oil and natural gas prices, with this record cold that we're experiencing, those prices are going up, and there's already been multiple reports that when you get your next utility bill, you're going to have to sit down when you open this one, because we're all turning up that thermostat a little more.
Yeah.
You add into the equation the fact that prices are going up, and it could be really hard on your budget for next month.
We talked last week about some of the people in Saratoga stopping and talking to me about their oil bill and having to fill up their supply. The Midwest talk about running short on propane supply. So this is a phenomenon all across the country where people are spending a lot more energy on fuel, and we're seeing oil prices up above 97. So I see natural gas starting to become, and that's crimping consumer spending as well. I mean, we're seeing it. People are not going out to McDonald's to go out for dinner because they don't have the money.
McDonald's, you were telling me dinner traffic numbers are down at McDonald's. So
it's connected.
It's not that it's these high-end restaurants that are suffering.
No.
When it's companies like McDonald's and the Dollar Store, Dollar General, and Walmart, it really shows there's a problem going on here.
This affects all Americans, and the average viewer out there is probably listening to this and saying, I know exactly what they're talking about because I'm feeling it. My wages haven't kept pace with my cost of living, and so there's some challenges there. And I think both political parties have kind of struggled to find a solution and how to sort this out. And that's where 2014 is really going to be critical, is to figure out how do we keep this growth going, how do we solve some of these issues.
All right, so I did promise some good news. We'll start with a report in the Times-Union talking about Global Foundries. Of course, we previously reported 30 job cuts at Global Foundries. They had said it was just kind of getting their house in order, and they were going to hire more people. They have done that since. They're about to do that. They're heading to Hudson, Massachusetts. There is a computer chip manufacturing facility that's closing down there.
Intel.
And Global Foundries is going to go shopping for some new employees, expecting to hire 70 good jobs from the, obviously these are not jobs being created right here. We're bringing more folks in, but still growth for Global Foundries.
It's a good example because the Intel plant in Mass is lower technology, older manufacturing techniques, and the Global Foundries plant is cutting edge. And so they're taking a lot of that expertise from Intel, seeing if they can scoop up some of these employees and bring them up into this area. So it's good news. The huge investment in Global Foundries at $10 billion to modernize the plant, up the manufacturing capabilities of this. So long-term, this is really good news for the area.
Yeah, really good news for them. Of course, there is the plans for, oops, we just popped up something we shouldn't have, but don't worry, keep on going. They're also talking about possibly that new fab. There's some questions if that's going to happen, but there's definitely growth there.
Absolutely.
All right. And then 2013, we reported this a little earlier in the half hour. 2013 was the strongest year in the last, since 2007 for housing. And the interesting thing about these numbers was it's not new construction, it's existing homes. So they're not, new construction is taking a hit, but existing homes are at least selling.
Yeah, you think about just take Saratoga, for example. This 1 mile radius around the city, there's a very limited area that they can actually expand on. Most of the land is already developed. And so the existing home sales, the price is increasing versus Albany and some of the other areas. People want to move to this community. It's a great community, and so the prices are showing. And that's really, really positive for homeowners that, a lot of other parts of the country are underwater on their mortgages. And, thankfully this area, Saratoga County has done well.
We've got enough stock. People want to live here, and they're willing to pay for it, which is good news.
In spite of the cold.
In spite everything today is in spite of the cold.
Yeah. Oh, my goodness. Stay warm.
All right. Thank you, Stephen Carlton,
Thanks,
First Vice President, Janney Montgomery Scott. Thank you. Now, to see this segment, head to our website, looktvonline.com. That's where we post it each and every week.